Provision, contingent liabilities, and contingent asset. Good day everyone, I am Cyril Bernadette Lazaro, together with Abigail Cruz and Andrea Luis Valentin. First, what is provision? A provision is a liability of uncertain timing or amount. Ibig sabihin po, ang provision po ay iba sa ibang liability dahil po sa uncertain nga po yung timing niya at yung amount po niya ay estimated lamang. Also, provision is separately stated in the financial position from the liabilities. How can we recognize a provision? A provision is recognized when all of the conditions are met. First, the entity has a present obligation resulting from past events. 2. It is probable that outflow of resources embodying economic benefits will be required to settle the obligation. And last, the amount of the obligation can be reliably estimated. If this third condition is not met, no provision is recognized. Present obligation. An obligation is present obligation if, based on the evidence available, its existence at the balance sheet date is considered probable, more likely than not. Past event. A past event that creates a present obligation is called an obligating event. What is obligating event? Obligating event is an event that creates an obligation that results in an enterprise having no realistic alternative to settling the obligation. Ibig sabihin po that the entity doesn't have a choice but to settle the obligation. Other examples po ng past event ay penalties, cleanup cost, and warranty obligation. Next, probable outflow of resources embodying economic benefits. An outflow of resources or other event is regarded as probable if the event is more likely than not to occur. The probability that the event will occur is greater than the probability that it will not. In short po, mas mataas po yung chance niya na mag-occur kesa sa hindi niya pag-occur. Reliable estimated of the obligation. Provision necessarily need to be estimated. If a reliable estimate cannot be made, no provision is recognized. Ang provision po ay kailangan valid yung amount niya sa tunay na amount nung future obligation. Next, contingent liabilities. A contingent liability is that may occur depending on the outcome of uncertain event. Sabihin po is para po siyang 50-50 chance na mag-occur. Then, ang provision po ay probable and ang contingent liabilities is possible. Ibig sabihin po, sa provision nga po, mas mataas nga po yung chance niya na mag-occur siya. While sa contingent liabilities po, ito ay 50-50 pa po kung mag-occur or not. Tapos, ang contingent liabilities po ay dinidisclose lang and ang provision is recognized, tsaka lang po siya dinidisclose. Contingent asset. A contingent asset is a potential economic benefits that is dependent on some future event largely out of company's control. A contingent asset is thus also known as potential asset. Ang mga contingent asset and contingent liabilities existence will be confirmed only by the occurrence or non-occurrence of the future event. So, ibig sabihin nga po, ang contingent asset at ang contingent liability ay i-record lang pag nangyari na yung event. However, in past 37, the term contingent refers to those who are not recognized because they do not meet the recognition criteria. Measurement of provision. A provision is measured at the best estimate of the amount needed to settle them at the end of the reporting period. So, kagaya po niyang nasa tabing chart, ang repair cost po niya is 20 million. Tapos, ang probability rate po niya is 5%. So, ang expected value po niya is 1 million only. Thus, recording the provision. A provision are normally recorded as debit to expense and credit to an estimated liability account.
Risk and uncertainty. The risks and uncertainties that inevitably surround many events and circumstances should be taken into account in reaching the best estimate of a provision. Risks describe variability of outcome. A risk adjustment may increase the amount at which liability is measured. Caution is needed in making judgments under conditions of uncertainty, so that income or assets are not overstated and expense or liabilities are not understated. However, uncertainty does not justify the creation of excessive provisions or a deliberate overstatement of liabilities. For example, if the project costs of a particularly adverse outcome are estimated on a prudent basis, that outcome is not then deliberately treated as more probable than the realistically the case. The care is needed to avoid duplicating adjustments for risk and uncertainty, with consequent overstatement of a provision. Present value. If the effect of the time value of money is material, the amount of provision should be the present value of the expenditure expected to be required to settle the obligation. Where the effect of the time value of money is material, the amount of provision should be the present value of the expenditure expected to be required to settle the obligation. Because of the time value of money, provisions relating to cash outflows that arise soon after the balance sheet date are more onerous than those where cash outflows of the same amount arise later. Provisions are therefore discounted where the effect is material. The discount rate should be a pre-tax rate that reflects current market assessments of the time value of money and the risk specific to the liability. The discount rate should not reflect risk for which future cash flow estimates have been adjusted. Future events. Future events that may affect the amount required to settle an obligation should be reflected in the amount of a provision where there is sufficient objective evidence that they will occur. Expected future events may be particularly important in measuring provisions. For example, an enterprise may believe that the cost of cleaning up its site at the end of its life will be reduced by future changes in technology. The amount recognized reflects a reasonable expectation of technically qualified, objective observers, taking account of all available evidence as to the technology that will be available at the time of the cleanup. Thus, it is appropriate to include, for example, expected cost reductions associated with increased experience in applying existing technology or the expected cost of applying existing technology to a larger or more complex cleanup operation than has previously been carried out. However, an enterprise does not anticipate the development of a completely new technology for cleaning up unless it is supported by sufficient objective evidence. The effect of possible new legislation is taken into consideration in measuring an existing obligation when sufficient objective evidence exists that the legislation is virtually certain to be enacted. The variety of circumstances that arise in practice makes it impossible to specify a single event that will provide sufficient objective evidence in every case. Evidence is required both of what legislation will demand and of whether it is virtually certain to be enacted and implemented in due course. In many cases, sufficient objective evidence will not exist until the new legislation is enacted. Expected disposal of assets. Gains from the expected disposal of assets should not be taken into account in measuring a provision. Gains are recognized separately when disposal occur. Gains on the expected disposal of assets are not taken into account in measuring a provision, even if the expected disposal is closely linked to the event giving rise to the provision. Instead, an enterprise recognizes gains on expected disposal of assets at the time specified by the financial reporting standard dealing with the assets concerned. Reimbursement. If another party is expected to reimburse the settlement amount of a provision, a reimbursement asset is recognized if it is virtually certain that the reimbursement will be received. The reimbursement asset is presented in the statement of financial position separately from the provision. Reimbursements were some or all of the expenditure required to settle a provision is expected to be reimbursed by another party. The reimbursements should be recognized when, and only when, it is virtually certain that the reimbursement will be received if the enterprise settles the obligations. The reimbursement should be treated as the separate assets. The amount recognized for the reimbursement should not exceed the amount of the provision. In the income statement, the expense relating to the provision may be represented net of the amount recognized for reimbursement. Sometimes, an enterprise is able to look to another party to pay part or all of the expenditure required to settle a provision. The other party may either reimburse amount paid by the enterprise or pay the amount directly. Changes in provision. Provisions are reviewed at the end of each reporting period and adjust to reflect the current best estimate. Changes in provisions are accounted for prospectively by accruing an additional amount or by reversing a previously recognized amount. Provisions should be reviewed at each balance sheet date and adjust to reflect the current best estimate. If it is no longer probable that an outflow of resources embodying economic benefits will be required to settle the obligation, the provision should be reversed. Where discounting is used, the carrying amount of a provision increases in each period to reflect the passage of time. This increase is recognized as borrowing cost. Use of provision. A provision should be used only for expenditure for which the provision was originally recognized. Only expenditure that relate to the original provision are set against it. Setting expenditure against a provision that was originally recognized for another purpose would conceal the impact of two different events. Future operating losses. Provisions should not be recognized for future operating losses. Future operating losses do not meet the definition of a liability and the general recognition criteria set out for provision. An expectation of future operating losses is an indication that certain assets of the operation may be impaired.
Onerous contracts. The provision recognized from an onerous contract reflects the least net cost of exiting from the contract, which is the lower of the cost of fulfilling it and any compensation or penalties arising from failure to fulfill it. Kapag sinabing onerous contract, ito yung unavoidable cost of meeting of obligations na kung saan mas malaki yung cost na ibibigay ng isang entity kaysa sa benefits na matatanggap nito. For example, yung sa page 173 ng Intermediate Accounting 2, nakalagay dito, in 20X1, an entity enters into a 3-year non-cancelable purchase contract whereby the entity obtains the right to purchase up to 60,000 units of a product annually for 25 pesos per unit. The entity guarantees a minimum annual purchase of 15,000 units. On December 31, 20X1, the product becomes obsolete. The entity has 10,000 units on hand, which the entity believes can be sold as scrap for 5 pesos each. Requirement: compute for the loss on purchase commitment to be. Para sa solution, meron tayong guaranteed minimum annual purchase na 15,000. I-multiply ito sa remaining years in the contract. Ito yung 20x2 and 20x3. So, dalawa sila. Ipag-multiply mo yung 15,000 sa 2. Ang kalalabasan nito is yung total goods to be accepted in the future na 30,000. Yung 30,000 na yon, imumultiply mo siya sa purchase price less scrap value na 20. Kasi yung 25 pesos per unit, minus siya dun sa 5. Kaya naging 20. Kaya 30,000 times 20 is equals sa 600,000. At ito na yung loss on purchase commitment as of December 31, 20X1. Restructuring. Restructuring is a program that is planned and controlled by management and materially changes either A, the scope of a business undertaken by an entity, or B, the manner in which that business is conducted. Ang ibig lamang sabihin ng restructuring ay yung mga changes sa entity or business. For example, yung business ay mag-iiba ng location or magre-relocate. O kaya naman yung business ay iibahin ng kanilang product line or business line. In recognizing provisions in restructuring costs, sinusunod natin yung general recognition criteria. But in addition to that, we also consider the following. Yung una is yung sale of operation. Sunod is yung closure or reorganization. At yung pangatlo, restructuring provision on acquisition or merger. At yung panghuli is yung future operating losses. Sa sale of operation, nire-recognize siya as provision kapag yung binding sale agreement ay na-obtained on or before the end of reporting period. Kapag after na ng reporting period siya na-obtained, madidisclose na lang siya as non-adjusting event. Sa closure or reorganization, nire-recognize lang siya kapag na-meet niya yung dalawang binigay na conditions, which is number 1, detailed formal plan for the restructuring is adopted, and number 2, the plan is announced to those affected by it. I-note din na hindi enough yung mere board decision para i-restructured ang business at hindi na rin nare-recognize ang provision nito kapag ito ay na-adapt after the reporting period. Sa restructuring provision on acquisition merger, accrued provisions or nare-recognize lang ito if both conditions are met. Yung number 1, announced at acquisition, and number 2, detailed formal plan is adopted within a short period of time after acquisition or 3 months. Kapag kayong sa last naman, kapag kayong sa future operating losses, hindi na siya nire-recognize. Measurement of restructuring provisions. It includes only direct costs that are necessarily entailed with the restructuring. It does not include costs relating to ongoing or future conduct of the business. Also, a restructuring provisions excludes the following: A. Retraining or relocating continuing staff. B. Marketing. C. Investment in new systems and distribution networks. Para sa lalo nating maintindihan, merong example sa page 176, yung sa illustration ng restructuring provisions. At ito yung nakalagay doon. On December 31, 20X1, ABC Co. adopted a detailed formal plan to close its toys divisions and put up a new division to manufacture warfare weapons. The plan was communicated through a public announcement, and all those affected by the closure were informed. ABC Co. estimated the following costs: termination of benefits of employees terminated as a result of the closure, 1 million; cost of retaining and relocating retained employees, 2 million; payment for the toys division unpaid purchases, 4 million; new systems and distribution networks for the weapons division, 20 million; marketing costs of the weapons division, 6 million; at yung panghuli, expected losses in the first year of operations of the weapons division, 20 million. At yung requirement dito, compute for the provision on December 31, 20X1. At yung naging sagot lamang dyan is yung termination benefits of employee terminated as a result of the closure na 1 million. Dahil yung cost of retraining and relocating, yung new systems and distribution, yung marketing cost, hindi sila sinasama dahil for future conduct na sila ng business. Yung namang payment for unpaid purchases na 4 million ay kasama sa accounts payable. Tapos yung expected losses naman na 20 million, di na siya nire-recognize. Other common types of provisions: A. Product warranties and guarantees. B. Premiums. C. Guarantee for indebtedness of others becoming probable. Warranty. Na-encounter natin ito kapag nag-purchase tayo ng mga gamit or mga equipment. For example, kapag bumili tayo ng mga gadgets, mga appliances, at marami pang iba. Para mas maunawaan natin ito, mayroon tayong example sa page 181 ng ating libro, yung illustration ng warranty, at ito yung nakalagay doon. ABC Co. provides 3-year warranty for its products. The estimated warranty cost is 100 pesos per unit. As of January 1, 20X1, the warranty obligations has a balance of 200,000 for units sold in 20X0. In 20X1, 5,000 units were sold and actual warranty cost is 300,000 pesos were incurred. Para sa requirements, kailangan i-compute ang mga sumusunod. A. Warranty expense, and B. Balance of the warranty obligations as of December 31, 20X1. Para sa solution sa requirement A, yung total units sold in 20X1 na 5,000, imumultiply mo siya sa estimated warranty cost per unit na 100. At yung magiging sagot doon ay 500,000 at yun na yung magiging warranty expense in 20X1. Para naman sa requirement B, para makuha yung balance of the warranty obligations as of December 31, 20X1, kailangan i-add yung warranty obligation na 200,000 noong January 1, 20X1 sa warranty expense na 500,000. At yung magiging sagot ay imaminus sa actual warranty cost na 310,000. Kaya ang magiging sagot ay 390,000. Liability premiums. Premiums are promotional items, for example, toys, collectibles, and similar items that are linked to a product and often require proofs of purchase to acquire. For example, meron tayo sa page 183 yung illustration for premiums, at ito yung nakalagay doon. ABC Co. has an ongoing sales promotion. For every 10 product wrappers returned to ABC Co. plus 50 pesos, customers will receive a set of kitchen knives. ABC Co. estimates that 40% of products sold will be redeemed. Information in 20X1 is as follows. Estimated liability for premiums on January 1, 20X1, meron siyang amount na 90,000. Sales in 20X1, meron siyang units na 500,000 at meron siyang amount na 750 million. Sets of kitchen knives purchase, 200 pesos per set, meron siyang units na 300,000 at may amount na 60 million. Number of wrappers redeemed in 20X1, meron siyang units na 45,000. Para sa requirements, kailangan i-compute yung premium expense in 20X1 at yung balance of provision for premiums as of December 31, 20X1. Yung sa requirement A, yung sales in units na 500,000, i-multiply mo siya by 40%. Tapos ang magiging sagot doon is yung estimated number of wrappers to be redeemed na 200,000. At yung 200,000 na yun, i-divide mo siya sa 10, which is yung number of wrappers per set of kitchen knives. At ang magiging sagot doon is yung estimated number of sets of kitchen knives to be distributed na 20,000. At yung 20,000 na yun, i-multiply mo siya sa net cost. At yung net cost na yun, ito yung 150 sa nakuha yun. Yung 200 pesos purchase cost, ima-minus mo siya sa 50, kaya magiging 150 siya. So, yung 20,000 multiply sa 150 is equal sa premium expense na 3 million. Para naman sa requirement B, yung 90,000 na sa January 1, 20X1, i-add mo siya sa 3 million na premium expense. Tapos yung 3 million na yun, ima-minus mo siya sa actual premiums na 675,000. Kaya ang magiging sagot is, as of December 31, 20X1 is 2,415,000. And for the last, guarantee of indebtedness of others. It recognizes a provision only when the liability for the guarantees becomes probable. Hanggat hindi siya probable, mananatili siyang unrecognized.